Welcome everyone to the Kendall Report. Amazing day again. I thought we'd see a rally, as I mentioned last night, and it's very possible it was a one and done situation. There's a few things that I'll talk to you about tonight. We're not getting any VIG out of this little, we'll call it a 5-day rally. And I think a lot of folks might be getting a little bit ahead of themselves, getting too optimistic. And we're just continuing to see the markets just waffle around. And, you know, I know Jay Powell was talking, right? So what does Powell say? Powell says, you know, we're going to keep raising rates until inflation drops. So I know what I'm about to say. It's not the U.S., but Peru has raised rates 10 times in a row, and inflation's still stable to going up. So what exactly are higher interest rates going to do? The only way higher interest rates are going to work is if they destroy demand. They've got to, basically, there's no soft landing. They've got to maybe not crash the economy, but they've got to hit it pretty good. And I think we're starting to see some things in the housing. We saw a big downtick there. Tomorrow we'll get housing numbers, and I think they're going to be significantly start to show some weakness. And housing tends to kind of lead the markets both ways. If you remember, going back to all the way to 2020, we saw that real estate come in. Everybody was moving, getting out of the cities. All that activity was going on. And, you know, now what we're seeing is real estate starting to back off. I don't think, I've said this many times over the last month or so, is I do not believe that we're going to see prices come down that much, but activity is starting to slow substantially. I believe we get mortgage numbers tomorrow. We get the housing starts and the permits. So those numbers will be interesting. We'll be talking about this in the live room tomorrow. And I just want to give a shout out to everybody that was buying the indicators today. Appreciate the business. And I think you're going to find some really exciting numbers and activity and profits ahead. So I appreciate you doing that. Just real quick, a couple other things that I've been thinking about here is just the whole scenario of why higher rates are going to do something, especially a methodical 50 basis points. They just run everything with this kid gloves. Okay, we're going to do 50 basis points every meeting. And is that really going to quash the whole scenario of higher inflation? I don't think so. I think what we end up getting here is just a very higher level. I don't know that it's peaked. One data point that we got last week doesn't make a top. You could downtick 2 or 3 months and then back to surging again. And I know China's coming back online, all of that stuff. So some of those disruptions, if you don't think the time that they were shut down and really at the zero COVID type situation affected the supply chain, you're wrong. And there's going to be a little bit of a shockwave, I believe, coming. And whether that's in the next couple months or maybe into the fall or whatever, but I think there's a shockwave coming there. But in the real terms, what we're talking about here is supply chains aren't going to get that much better. I know somebody on the channel, I read a comment that was talking about they were in the shipping business and everything's really robust. Yeah, the shipping, that's fine. That's because everything's backlogged. I mean, try buying something right now. It's absolutely crazy. And even though I'm talking about activity of the real estate market starting to fail a little bit, it's not going to be like a collapse of any sort. I think it's just a backup and a little bit of demand, especially for new. That's going to be an issue. I think the builders sentiment came out the worst that it's been since early 2020. So we are seeing things more in the new, not in the existing homes. So like I said, we're going to get a bunch of reports out tomorrow. We'll take a look at that, see what those metrics look like. So yesterday was super strong, right? S&P up 2%, Nasdaq up 2.76, Russel up 3.19. Pretty impressive numbers. 10 of the 11 sectors were up. Retail sales, just speaking of the economy in general, came in at 0.9. It was expected 1.1, so a little bit of a miss there. And then we saw industrial production come in at 1.1. It was almost double what was expected. I believe, at least the numbers I had down, it was a 0.5 expectation. And and then this is where the number, the home housing index came in at 69. It was expected to be 75. And this is what I'm talking. I think we're just going to continue to see these numbers back off. I don't think they get into serious negative territory, but that is the first sign of things going on. And the other thing, I have a couple. I have more screenshots on my phone than I have pictures of people, I think, because I'm always screenshotting things when I see them around. But my good buddy Ed Yardini and just about every economist you can find, no one believes there's going to be a recession probably this year and maybe even next year, and I'm not sure what they're looking at. I'm not sure if we continue to raise rates at whatever level. We've already seen that the dog started wagging the tail again, meaning that the markets raised the rates. It wasn't the Fed. The Fed's actually playing catch up right now, and they've been behind, and we're going to continue to see that. But the point is that I still think that we could get a second negative quarter. I had a debate on Sunday with a friend, and they don't think there's one coming. Could be. I think there were special circumstances that caused the 1.4% decline in GDP in the first quarter. We'll see. I just don't see it. Maybe we get a blip up, so now we're 2 quarters down the road. And I'm going to continue to keep this in front of you folks, is that one of the big things that I'm looking at here is that last day of June close, which is 45.30. Right, mark that on your calendar. Very last day. If it's above 45.30, that's good. That means, doesn't mean we're going into a bull market. It just means we're not going into a multi-quarter decline. And if we do get into, we close below that, I'd probably compare us to probably 73, 74, at least a 4, maybe as much as 6 quarters down. I mean, there's just so much, I think, excess and so many things that are still broken and about to re-break is going to be interesting. And I've been on this scenario for a while, folks. You've been following the channel. You know, back in fourth quarter of last year, I was talking about the economy hitting a wall. We're still seeing good labor metrics. There's still good metrics out there. But all of a sudden, when we came into January, we see the market certainly hit the wall, and maybe they were leading the way. And I think we'll see some more evidence as we go through the end of this quarter, probably into next quarter. So that will be pretty significant, I think, from the standpoint of reading the tea leaves going forward. And, you know, just to summarize this, I'm not sure two things: that the Fed raising rates and telling us they're going to raise it at every meeting 50 basis points is enough. You know, they probably are going to do exactly what they said. And I think at some stage, it's not right now, I'll cover the 10-year and the interest rates here in a few minutes. It's not at the moment, but it is getting closer. Once we consolidate, maybe backfill a little bit on the treasuries, maybe come back into that 275 number. If we get back into that level, then after some consolidation, we should see another surge, maybe printing, you know, mid threes on the 10-year, you know, 1050, 1060. So that's where the Fed is just going to continue to get behind, and the bond market's going to be adjusting the economy. If those things happen, then that's going to be a very realistic scenario that I'm painting. So let's go ahead and take a look at the database. It shouldn't take long to get through the stream tonight. Everything's pretty straightforward. So let's go ahead and get into the Wavetech database. Let's get over to the daily. We did have reasonable numbers come out of today. We had 890 buy signals, 141 sells. So we did have a positive rotation. You'll see on this table here, it shows that the daily rotation was bullish, but we're still at 16.1%. We're a long ways from getting any material traction. And we got to get, from a short-term basis, we got to at least get over 22 to 28. This market can bounce around here and absolutely end up going nowhere. And that's what I'm seeing here is we're already, looks like, even though we got some buying on the database, it's not material at all. So that's positive, but not positive enough to signal some kind of major turn in the market. Maybe we continue to unfold here for a couple of days. I'll talk about it in a minute, but I do think the next couple sessions will tell us about how we're going to unfold here for the rest of the month of May. And that's what I'm starting to see the setup here for the balance of the month. So we're really just from a pure database standpoint, nothing's going on. Yes, we got some traction. It's not material enough to signal any kind of turn in the markets. So we'll go into the S&P 500, and this is, for me, what is interesting. You'd think after yesterday, 2% gain in the S&P, we'd see the PPMs turn up. The opposite's happening. Everything's turning down. When you get a positive day like that and the PPMs aren't responding, we're not getting real database traction, all of those things start to happen. All that tells me is that it's possible that maybe we're getting, you know, we did get above the 10-period moving average. I mentioned in last night's video that I thought we could get to the 21 period moving average. I thought across the board, Nasdaq and Russel, the whole 9 yards. That's at 41.46. We printed so far tonight 40.95. We may not be able to print a new high, but it's possible. I'll show you the market grid here in a minute. R1's around 41.06. That's going to be probably a pretty good point to be looking to trade off a rejection off of that level. Could extend up to 41.30. That would be the ultimate, and that would probably complete this pattern. So what I'm looking at here, from we had a low on the 11th. We got five. This is 5 sessions. We actually made a slightly new high so far tonight. The high's been 95. Yesterday's high, I believe, was 90 exactly. Yeah, yesterday's high was actually 91.50. So we printed a new high so far tonight. We backed up. We're heading toward the. We're down. Let me get on the right day. I'm on yesterday. I'll bring that up on the screen so you can see this. But we're looking at S1 40.63, S2 is 40.38. And what I'm thinking here is that we broke through the 10. It's still declining. We could retest the backside of that 10. So look for somewhere between S1, S2 setting up a low, and we'll find out if the buy the dippers are still hanging out and see if they're willing to put some money back in risk when we get there. So if we manage to stabilize, stay above the 10-period moving average, which is right now at the 40.29 for tomorrow, then we're probably going to stabilize and possibly get another run at the 21 and maybe move ultimately up to the 40 and set this up. But I'm going to show you something here that I think is interesting. When we got this little rally off of the low, the first time when we printed the 40.93 low, we printed up, we got above the 10, the 21 was declining, and we went down and we reprinted a new low. And what I'm thinking here right now, depending on the next couple of days, we're probably going to have to retest that 38, what was it, 38.58? Let me get the exact low, 38.55 low. And we're probably going to have to revisit that and see if it's real and see if the market can hold. We also have seen over the past several sessions is that we've been holding right above 4,000. So there's still, I think, some work to be done here. I titled this video tonight, Market's Not Out of the Woods Yet. I don't believe it is. We go into intermediate and larger levels. You're still looking at a lot of downward pressure on the markets. And as I said last night, doesn't mean we can't rally into mid 41s. If we, depending on how we set up, I believe the next 2 sessions are going to tell us at least how the setup is, whether we're going to get a retest of that 38.55 low. And if that holds, then possibly we could move above this high, whatever it ends up to be. If we end up managing to close higher again today, which it doesn't look likely, but it's certainly a probability. We're only down 7 handles right now, but if we can get above that level, even though if we print into a higher close over the last 5 days, and we end up there, we're still vulnerable to the downside. And like I said, I think this 38.55 level will be revisited. So next we'll go to the Nasdaq. Nasdaq is a very similar formation. PPM1 now is a minus 0.81, and that's a substantial downtrend. And typically when we get above a declining PPM like that the 10-period moving average, which right now is at 12,371, acts as, I always say it's like a magnet. So gravity is going to pull it down toward that number. That's what I was talking about on the S&P, is pulling back, testing the backside of that 10, and then see how it acts there and see where we close tomorrow. It's going to be, we're kind of in that 5th day up. Typically, if we're going to get a positive pattern, this goes with the S&P as well. if we're going to get that pattern, what we're going to get is we have 5 up, we get 3 down. Typically, we'll get 3 down, and then we'll get 5 up again, and that would move us up well above the 21 and maybe back into the 40-period moving average. There's just not a lot here from the standpoint of looking at momentum. It's really the lack of, and the momentum is down. 0.81 minus 6.3 and minus 3.8. Those are all negative downtrend numbers. These are not positive numbers. So it will take, if this sets up a pattern like I'm talking about here, where we had 5 up here in this pattern, we pull back 3 and then get another 5. After that, that would probably burn off enough of the downward momentum where we'd have something a little more substantial to move into. And when we get that configuration, I'll bring up the weekly chart then and start to set up that a little better. But like I said, we're not getting any material traction in database. The PPMs aren't showing us anything that we need to be concerned with. It was fairly obvious to me that we'd get an up day yesterday, bigger than I thought, but nonetheless, we got that day and we got above the 10. But this scenario I'm painting out is across the board on all these indices. So that's why I say we're not out of the woods yet. We still have a lot of work to do. And that is going to ultimately, like I said, determine pretty much the end of this month. So if we don't take out 38.55 on the E-minis, on the Nasdaq, that number is 11,689. We'll call it 11,690. If we hold that number and we don't take that out, then we can get another 5-day sequence. And I think potentially we just get a retracement back to that level, which would probably put us back in, I didn't run the numbers, but just roughly put us back towards 12,200 on the Nasdaq. And if it holds in there, then we set up. And let's say that happens. Every time I say something has a 3-day pattern, it happens the next day. And there is a fair amount of negativity, like I said, on these PPMs. So there's certainly some potential for a downside. And they could just do what we've seen in these patterns in the past several weeks, where we get what I call a reverse of the reverse. So we get this big up day, they take it back mostly the next day. And then, like I said, we won't have the real answers until Thursday and Friday. We come into Friday, we might have the pattern set up that we can make a call. And if some of these things I'm talking about set up, I'll be able to make a call on how this month is going to go. So the whole, maybe May ends up to be a positive month and a negative. But like I said, all my focus, and I said this on the opening comments, is focused on that 45.30 number on the S&P. That's everything to me. And, you know, if you recall, when we came into the end of the first quarter, there was a number, and literally it looked like we weren't going to get the close, and we got the close. And now what we've seen so far this quarter is another new low. And it is doing exactly what it's supposed to be doing from the pattern that I set up going all the way back into January. And so I'll go through those details once we get a little further. But this setup is probably what we're going to have to do is watch around these that 11. Right around this 12,200, something in that range. What kind of bounces? If we get like a really nice support bounce, then I think we can set up something and maybe talk about higher numbers. But I think you're taking just a bet on that. If you bought 12,200, if you had that opportunity, that would be, I think, a positive place to put a position on. But you're going to have to pay attention that it bounces off of that level. It doesn't just meander there, because that'll just set up potentially. What we're really looking at is that retest of that low that I just talked about. Let me put that up again. 11,690 is roughly the low. 89 was actually the low. So those are the things that we have to watch in order to be able to trade this pattern. I'm a little disappointed there was an opportunity to get short earlier. I wasn't by my desk. So anyway, that's the way it goes. So we're looking at right now, this is the pattern, and it's the same thing. So I'll quickly go to the Russel and show you that pattern there, and then we'll move on. So here's the Russell futures and RTY. We got almost up to the 21 right here, but same configuration on PPMs. Everything's turned south. There's no confirmation of anything. We're down 3.60 right now on the session, down 0.20 percentage wise, and the 21 period moving average 1862. We printed 1841, so we closed lower. Same scenario, 1792. That number's got to be tested. We look at that's S3 for tomorrow. Basically S2, S3. Everything looks to me R1, S2, possibility of S3 depending on how we end up trading here. So here is the 10-year, and this was some of what I was going on in my little opening comment riff, is that ultimately we still have Fibonacci projections up above the market, 3.36, 3.61, 3.76, so 3 3/4. There's still some interesting numbers, and a lot of times when you see these kind of configurations where you'll see these cyan, yellow, red dots up here, whenever we get those type of configurations where they're very similar patterns coming out of multiple structures of the market. This is an algorithm that I wrote. This is one of the indicators that you get on TradingView, but these are very powerful because it gives you some expectations where the patterns say we're going to go. And the first pattern, even though it failed, that was suggesting for us to go up to the, let me bring that up just so you have that number. That was for 3.13 was that original target. Well, we went to let me get the number here, 3.16, I believe. Yeah, 3.167 was the high of that pattern. So even though this stopped calculating, that was a valid Fibonacci standpoint. So we're getting these stair-stepping Fibonacci's, which is kind of interesting because really what you would look at here using this tool, you look at the mid target here is for, let me get the right numbers so we can get that up. Looking at the 3.44 and the other one is 3.61. So 3.4 to 3.6, those two Fibonacci patterns are lining up, and what they're telling us is that that's most likely a target zone, but we have to get the trends to turn back up. And right now the PPMs are negative to flat. They've been declining. So this is where I was talking about us going back to possibly 284 to 275. We'll get a consolidation. Then we're likely to see maybe another surge. And maybe this comes after, after May into June. Who knows? We'll see what sets up. But the overall pattern is here tells me that we're probably not going to go over 3.16 right now. And really, if I bring up the weekly, I looked at them earlier, around 3.06 it should be the extreme, at least for this week. And on the downside, we probably already printed the downside risk is around 338, 378. That's going to be your downside for this week. So from the standpoint of what's going on with the rates, are just going to be stable here. I don't think they're going to be a factor in market considerations or affecting sentiment in any way. Let's take a quick look here at the yield curve, and yield curve has been steepening. It did back up just a little bit yesterday, so this is something I'll be watching quite a bit from the standpoint of how far does it come back. We're at 21 and a half basis points right now. 530 chart is what you're looking at here. And if we go a little bit further and we go out to the weekly pattern, you'll see this. This is a bit, it almost looks like an ABC. If you wanted to put an Elliott wave pattern on it, it looks like an ABC correction. So we could easily come back down to a flat yield curve on the 530s, and possibility of inverting again. So there's still plenty of things that happen in this market. It's just not over. I can't even tell you how there's so much from a configuration that has to happen before we're going to see anything material change that we could look at and say, hey, this is a new trend. We've got a bottom, all that stuff. That's not a conversation I don't believe you can have right now. And not that you can't see volatility and big stampedes. We've seen those before where we get, 3+% days and all that. What I'm saying is, as far as a new material uptrend, all the moving averages, positive PPMs, especially on the weekly, that is a ways off. And I would be very surprised if we were able to get through all of that on the equities. And that's exactly what the 10 years is telling you. We got at least 4 to 6 weeks of consolidation here. So next market we'll look at, I am on the daily crude oil. We just continue to waffle around like I've been talking about. We did print up to the almost 116, got a high 115.56. This is daily. Yesterday, here we are back again. We're 110.24. Still locked in, staying above these moving averages right now. 104.5 is probably your downside risk at the moment. So 104, and we'll probably call it right up around 110, 114 that we printed the other day. We're just seeing really nothing going on. PPM 1 is rolling over, but it's still in a positive 0.23. PPM 2, 0.37. So we're still in uptrend. So all that tells us is that those levels are 105.50 and 104.40 are going to be major support. So I wouldn't look for any type of rollover. And if you've been watching, I've been talking about the energy stocks. And in fact, maybe I'll just put it up here. I'll put XLE up. You'll see the XLE had backed off a little bit. And now we're printing up right now, and the XLE is projecting into all-time new high for these stocks. And I talked about this last night, is that these energy stocks are going to continue to do well. They're not reinvesting money. They're building cash on the books. I don't know what they're going to do with it. Maybe they're going to buy solar panels. I don't know. But they're not spending it on oil production. And so the point is that these companies are just cashing in on these high prices. And I don't think it's necessarily price gouging. I went through this scenario last night. I think they're just playing into all the constituents. So all of the climate people on one side and folks on the other side, they're appeasing the climate people, going, hey, we're not reinvesting. We're not creating more fossil fuels. We wouldn't want to do that. That would be evil. But prices are probably going to keep going up, and we're going to keep making lots of money. So in the end, they found a way basically to manipulate and make lots of money, and that's what they're doing here. And from my viewpoint, we've got, like I said, targets for all-time new high on XLE. I did a ETF hack, and I think we're pushing like 34% return this year just from the beginning of the year. We actually built that live in our live trading room. We built that XLE hack, we call it, and we're trading on daily and weekly from our models. And it's just done an amazing job navigating when the market was pulling back. It readjusted the portfolio, and it's back pushing the limits, pretty much 100% invested again. And so all I'm telling you is these energy stocks are going to continue to be in play. I've said this probably 20 times at least, is that as long as we stay above 96, we're going to make, these companies are going to do well. Okay, next market I'll look at is gold. Gold continues to waffle down here. This is the daily chart. Really can't get up its own way, but what is happening here on gold, we're starting to see some of the configuration on the PPM starting to turn up. So there's a shot to get back to nothing exciting, but back to the 200-day average right now, which is at the moment 1840. And that would be a win for gold in this configuration. We go back to the weekly patterns real quick here. And the weekly, we are trading right now. The low so far this week has been 1785, S2 1772. So we traded almost down to an S2, and 1825 is R1, so R2 is 43, 1843, which would put us back, if we were to print that, back to that 200-day moving average. Overall, I just don't see any opportunity here, but I continue to watch. I've been trading gold for 40 years, so I guess I'm just attached to it. We'll stay here with the Bitcoin is next in the final market. Kind of getting the same configuration. This is a weekly chart, pretty narrow range for after what we saw last week with that big print all the way down to the 25,364. So far we're looking at 29 to 3070. So, really like $1,000 bucks, and this starts on Sunday night. So we're looking at 2 days, pretty narrow range. So it's stabilized a bit. PPMs are still super negative here though, so nothing to get excited about. If we're lucky, we hold the 200-week moving average. That's 21.9. We'll call it 22,000. That would be, I think, the screaming buy. That's where you back up the truck, so to speak, and load it up there if you saw 22. I don't know that we're going to see that. We'll look at the short-term charts just to see how they're setting up. And we're getting this really interesting. I'm going to blow this up so you can see this is an interesting pattern that's unfolding here. It's almost like we're seeing this narrowing of the volatility over the last 4 days. I mean, look at this. This is a squeeze. And we got PPM1 still negative, but it's cutting through its second derivative. So we're negative enough that this is going to be a lot of pressure at 31,075. Probably not going to get above there. And looking at the market grid, it's pretty tight. 28.7 is the bottom end of this range. So there's really not a lot here. I would continue to be cautious. And like I said, if you saw a 22 print, 22 handle, you would want to probably be all over that. That would be the point. You think about, I don't know what the percentage is there, but it'd be what, maybe a 60, 65% decline off of the highs. That would be pretty substantial. I think the carnage and the sentiment in crypto after what's happened in the last 10 days is got a lot of people reeling. There was a lot of money lost, and it was probably the first, we've seen crypto, we'll call them crashes, but we haven't seen, like these stable coins that went to 1 penny and they're supposed to be stable. They weren't. So a lot of things went wrong with that market, and it's certainly probably, if anything, maybe folks are more attracted now to Bitcoin and maybe it'll stabilize, but it's going to be really tough to read the sentiment. I don't spend a ton of time on it. I do cover it every night. I started doing this probably about a year ago, maybe. And so I'll continue to cover it, but that's what I'm seeing here just from a technical standpoint and what looks like is setting up. So folks, this will be the end of the video for tonight. So make sure you go ahead. I appreciate everybody. Just a shout out to everybody that did sign up today. There was a fair amount of you. I really appreciate this, but the indicators are special. It's basically a 50% discount because you get into the live room for a month for free, and those happen on typically Monday, Wednesday, and Thursday. So tomorrow at 1 o'clock we'll be in the live room, and we'll be setting up real-time trades and using the indicators and all that stuff. So hopefully we'll see you there. I suspect we'll see a lot of new people, so that's exciting. They have new bodies in the room and lots of new input. So thanks again for supporting the channel. That's one of the best ways to support the channel, and it's not a subscription, it's a one-time purchase. So I just want this out here. Just rattle on for a minute on this, folks. Is really what it is me giving back to community. These are the indicators that I developed back in 1984. A lot of them. Second round was around 1990. Market Grid around 1996, 97. And a lot of these indicators have been around for a long time, and they've been offered on multiple platforms. And I've used them primarily on TradeStation that you see every night. But anyway, folks, thank you so much for watching. And I think that I'm going to pop this up here real quick, but this is the indicators on the screen. You got all the stuff. So I appreciate it. I really hope to see you folks in the live room. So thanks again. I really appreciate it. I see some folks that I know that are in the live room, and it's I think we have a lot of fun and we get to learn a lot. So anyway, sales pitch at the end. But anyway, have a great evening, and I will see you all tomorrow night at this time. Those of you in the live room, see you at 1 o'clock tomorrow Eastern time. Thanks again.